Kim, very good to see you. I'm excited about today's topic, why DIY investors earn less. According to Vanguard's Advisors Alpha study, a good financial advisor can add about 3% in net returns per year through behavioral coaching, asset allocation, rebalancing, and tax planning. 3% a year, that bears repeating. So what do you think is behind that performance gap?
There's so many things behind that. And I always think it's funny
Yeah.
that it's a Vanguard study, since Vanguard is like the king of no fee, low fee. But one of the major things that we see is the tax planning element of it. We will see, investors come into our office, be do-it-yourself investors, even if they're very good at picking stocks. What we have seen in the past is they don't understand all the tax implications and other ramifications that can come along with that. So we've seen people make very good stock investments, sell before a year is up, and now they have this huge tax liability they didn't think about, which really eats into that return. So there's all these little nuances that can really play into that.
Right. It's so much more than just investments. So I want to throw a few more stats at you. According to a yearly and infamous Dalbar study, which I know you know, DIY investors often underperform the market as well because they are driven by emotions. Explain what's going on there.
Yes, we call it the fear and greed cycle, to be honest with you. A lot of investors, if they are doing it themselves, like you said, are driven by emotion. So what happens, you can see as you have in your chart there, as the market is doing really well, a lot of times we feel like this is great, we should get in on some of this return. And so we invest towards the top. And then when the market starts to turn and goes back down, we start getting more and more scared. And then we think, I can't see my money lose any further. And so we sell close to the bottom. And it's this kind of cycle where we're buying and selling at these wrong times, which really eat into our overall performance.
And of course, when we have a plan, we don't feel the need to make those knee-jerk decisions.
Exactly.
So many DIY investors believe they can save money by avoiding advisory fees. How do you help clients understand the value you provide?
Well, first of all, we are very black and white with our fees. A lot of times when we're meeting with folks, again, if it's a DIY person, for example, we'll take their current portfolio and say, look, if we did nothing else, which we do, to your point, we do comprehensive planning, so we do a lot more. But if we do nothing else but simply recreate your current investment strategy, meaning stocks to bond ratio with our own investments, a lot of times we can outperform what they are doing, including that management fee. And then again, they get the benefit of working with the advisor that's going to take into account taxes, income planning, healthcare, all those other nuances of a good financial plan.
For someone who's thinking about hiring an advisor, what's the best way to start the conversation to determine if they should? And what should they expect in that first conversation?
So for us, we try to make it as simple as possible for folks. If someone's thinking about it, we say, look, let's jump on the phone, have a 15-minute conversation, see where it goes. In that 15-minute conversation, it's really just to get to know you and get to know me. They can ask any question that they have of me, because a lot of times people don't know what to expect when talking to a financial planner. How do we work? How can we get compensated? All those different nuances. And then learning about their situation. Why do you think you might need a financial planner? What are the areas of concerns that you have? What are your goals? And then from there, we can kind of map out that next best step going forward.
Well, Kim, if somebody would like to just have that 15-minute conversation with you, what's the best way to reach you?
They can go to our website. We've got all of our ways to contact us there, www.young-wm.com, and we'd be happy to set up that chat with you.
All right, Kim, thanks so much for your time today. I appreciate it.
Thanks, Erin.